Guess what? It's tax time. Yes, it's only January, but we're thinking about taxes early this year. One big question on a lot of people's minds is how work from home affects things. So I'm going to throw that out to Bruce, who's here to break it all down for us. Hey, Bruce.
It's a big difference now with so many of us working from home a lot or all of the time. And I want to start with the things you can't deduct, because some people are like rubbing their hands together and thinking everything counts. It is not true. There are some exceptions here. Pandemic pajamas do not count. I know that is basically what we're all living in, the jeggings, the snuggies, the slippers, and all that. This is my pandemic pillow. Is that
so
not
good.
the best pillow you've ever seen in your whole entire life? You can't deduct that. Sorry. You also cannot deduct backyard renovations. So I found one guy in the US who's like, listen, I have built this extraordinary backyard. My home office looks out over this extraordinary backyard. Therefore, it is a part of my home office. A desk chair and a lounge chair are not the same thing, I am afraid. The third thing that you cannot deduct are pet expenses. There was a person who actually went to tax court to try and fight for the ability to deduct pet expenses because she argued that her dog was a part of her security detail, her security plan, which maybe if you have, like, I don't know, a German Shepherd, but if you have a teacup Pomeranian, I don't think so. And certainly don't try and pass off a stuffy as like part of your security. You cannot write that off, Tracy, I'm afraid.
Oh, your little puppy is so cute. Okay, I want to talk a little bit about this new $400 deduction. How does that work?
So this is a new and temporary measure that the federal government has just announced. And you can still do it the old way. The old way is like, what percentage of my house is my home office? Do I need to get a form from my employer, keeping all the receipts? This is a new and different way. And it's for this year, maybe it's the only time, maybe it'll be extended. But basically, it's $400. You don't need to keep receipts, and you don't need that pesky little letter from the employee. So it certainly is easier this time. How it works is that you get $2 per day that you worked from home.
Government benefits like the CERB have made things a little bit more complicated for a lot of people. So how do they affect taxes?
Well, they're taxable. So for a lot of people, it's like, what? I might have to pay taxes. And it really depends on how much money you earned over the course of the year. But let's just say you you received and needed $12,000 in the CERB. At 15%, that's $1,800. So some people come April are going to be like, where do I get $1,800? It's the time to pick up the phone, talk to CRA and say, listen, I owe money this year. I don't know how I'm going to pay for it. I'd really rather not put it on a credit card. Is there a way that we can structure something a little bit different?
Oh, that's very good advice. What about the new programs? How are they taxed?
So they're still taxable. They will have tax withheld at source. Only 10%, but that's something. Because this was a big surprise for people that they're going to have to find the money to pay tax. With these new programs, they won't. And there are three of them that we should just mention. The Canada Recovery Benefit is the first. So this is for people who just don't fit under the requirements of traditional employment insurance. So gig workers, contractors, that kind of thing. The second is the Canada Recovery Sickness Benefit. And this is for people who need to support others who are sick, who maybe need to self-isolate because of COVID-19, or they've got an underlying condition that prevents them to work at their full capacity. The third one is called the Canada Recovery Caregiving Benefit, and this is for people who have a child at home under the age of 12, and that's going to affect their work life, or they've got a family member who's going to need supervised care. So these are benefits that are still available to people, and that's important because if you're receiving them, you're going to need to, keep records of it so you're not struggling to find the cash come April.
Okay, what are the other things that people should be getting on top of now when it comes to taxes?
The tax slips and stuff that you're going to have to wait for, the T3s and the T4s, all that. But what you can do in the short term is gather your receipts for things like childcare expenses and charitable donations, those sorts of things. It also is a good time in January to say, maybe this is the year that I have someone else help me with my taxes this year. Or maybe this is the year you say, I'm going to do it myself this time round.
Bruce, that segment was jam-packed with so much good information and tips. Thank you so much for that.